Real estate agents and investors. Tax moves to make before Q3. Stop missing these deductions. Real estate agents and investors. Q3 is coming fast. And if your tax records are currently living in your camera roll, your glove box, your email inbox, and one mysterious folder named Stuff, we need to talk. Real estate can make you money, but bad record keeping can quietly take it right back. This is education, not tax advice. Talk to your CPA before making tax moves. Let's get into it. Tip 1. Track your mileage. If you're driving to showings, closings, inspections, listing appointments, rental properties, contractor meetings, supply runs, or open houses, track those miles. For 2026, the IRS business mileage rate is 72.5 cents per mile. That means 1,000 business miles could represent $725 in mileage deductions. But here's the part people miss. You need a mileage log. Not vibes. Not I drive all the time. Not boss, you know I be moving. The IRS wants dates, business purpose, locations, and miles. So use an app, spreadsheet, or mileage book. Just don't try to recreate your whole year from Google Maps and regret. Tip 2. Agents. You are usually the business. Most licensed real estate agents are treated as self-employed for federal tax purposes. That means your business expenses need to be tracked like a real business. CRM fees, MLS dues, lockboxes, signs, photography, marketing, phone, software, client gifts, continuing education, business insurance, all of that needs a system. One overlooked fact: client gifts are usually limited to $25 per person per year. So yes, track the gift. No, buying the client a luxury grill may not work the way you think it works. Tip 3. Don't sleep on the home office. If you have a dedicated space used regularly and exclusively for business, you may qualify for a home office deduction. The simplified method is $5 per square foot up to 300 square feet. But exclusive use matters. If your office is also the guest room, laundry station, snack closet, and your kids' gaming headquarters, that's not an office. That's a tax argument waiting to happen. Take photos, measure the space, and keep clean records. Tip 4. Investors, repairs and improvements are not the same. This is where rental owners get caught. Fixing a leaky faucet may be a repair. Replacing the whole HVAC system may be an improvement that has to be depreciated over time. Painting and patching may be repair. New roof, different conversation. Don't just label everything repairs because it sounds better. Your CPA is going to look at that invoice like, be serious. Send big project invoices before year end so they can classify them correctly. Tip 5. Depreciation can be powerful. Real estate investors love cash flow, but depreciation is where a lot of tax planning happens. Residential rental buildings are generally depreciated over 27.5 years, but land is not depreciable. That's a commonly missed fact. You cannot depreciate dirt. Dirt does many things. Tax deductions are not one of them. If you bought a rental, furnished a short-term rental, renovated a unit, or added equipment, ask your CPA, do we need a depreciation review or cost segregation discussion before year end? That one question could change your strategy. Tip 6. Watch estimated taxes. Agents and investors often have income without enough withholding. That means estimated taxes matter. If you had a strong first half of the year, closed a big deal, sold a property, raised rents, or added short-term rental income, check your estimates now. Because nothing ruins a good year like realizing the IRS was your silent business partner the whole time. Tip 7. Track your hours. If you're trying to use rental losses or qualify for real estate professional status, documentation matters. The IRS rules are not based on your confidence. They are based on hours, participation, and proof. So keep a time log now, not in December, not during tax season, now. So before Q3 gets busy, do this. Track your mileage. Organize expenses. Review your home office. Separate repairs from improvements. Ask about depreciation. Check estimated taxes. And document your hours. Real estate rewards people who know their numbers. Tax season rewards people who kept receipts. I'm Boss. Follow for more tax tips for agents, investors, and business owners. And send this to somebody still running their business out of their camera roll. Talk to a CPA. Keep clean records. Build wealth like a boss. Take care. See you next video.